What I'd like to do then is introduce Alex Howerton. He is the space business editor for Countdown magazine, where he writes Space Available, the Space Investors Report. He's written the book Free Space, Real Alternatives for Reaching Outer Space, which examines alternative space development concepts. His talk presents the current state of space business. The various space industries are examined, and which companies are doing well and which are doing poorly is discussed. A few investing tips and concerns are presented. He's not a registered stockbroker. Here's his disclaimer, folks.
Note this.
And his comments should not be taken as an explicit recommendation to buy or sell any securities, and this is superfluous, so I'll turn it over to Alex now. Thank you.
Thank you. Well, Chuck's idea sounds great. I'm ready to go. How about you? Let's go. Well, the thing is, we're not millionaires and we're not real estate developers, and Chuck's not taking money for his escrow account yet. So how do we get there from here? We're pretty much just a bunch of space nuts trying to figure out how to make something happen here. And Chuck's talking about big money. He's talking about, Donald Trump and Luxor and all that. That's not my league. How do we get there from here? Well, there's a way. You can build slowly and smoothly and build up a capital investment and then be able to have some money and have some leverage eventually at one point or another. If you think what I have to say here is not a load of hooey here, you can read more about it. As I said, the magazine I'm with, Countdown magazine, I publish a space investment report every other month in that. And I've written a book, Free Space. You can pick it up from me, or I'm over in the display room. Enough self-aggrandizement there. Well, you got to start small. You can't expect overnight successes. I've been listening to a lot of people around here, and a lot of people want to get big bucks now and just go and just run with it. And they want to, who has the big bucks right now, or who is perceived to have the big bucks right now? The government. So there's all this push to get the government to do this and do that, and the X-34, and we heard the arguments yesterday about whether the X-34, NASA should be putting money into the X-34 or not, and you can have your opinions on that, but the crux of the matter is there that somewhere, somehow, all this has got to get jump-started. And if you're looking for something big and bombastic, it's probably not going to happen. You got to start slow and incrementally, and you got to build, and then over time you develop the money and the leverage and the capital to actually make things happen. So how do you, as just an individual space enthusiast, get going on something like that? Well, there are common stocks. You can start with common stocks in the aerospace industry and in general industries. Oh, that's my broker. Well, so I've been tracking the aerospace industry. I do not profess to be a financial expert of the whole industry, but I wanted to put my money where my mouth is. I've been talking, let's go to space, let's finance it privately. Well, how do I do it? Well, over 2 years now, I've developed a hypothetical tracking of space stocks that is done over 2 years now, about 38%. And my real stocks in my IRA are not far from that. So, it can be done. In the long term, in the very long term, it's very hard to beat the market by any significant degree. So I expect that number to be floating down over time. But still, you can do it. You can put your money away and have quite a bit of it. You gotta look at the fundamentals. If you got the leverage at Chuck and his partners, you can jump in and out and talk about internal rates of return and all that. But for us, for me, who has to work a regular job and don't have time to watch this all the time, you gotta look at the fundamentals. So that's what this is about, the fundamentals of the aerospace industry. If you look at the aerospace industry, it's really three separate industries. You've got defense, you've got the commercial airframe makers, and you've got space per se. Well, now traditionally, because of the overlap of technologies, some of the bigger companies like Boeing and whatnot have been involved in all three. Well, even if they are involved in all three, they're relatively separate operations. They have separate divisions or organizations or operating groups or whatever. But there are some pure plays. Everyone knows Orbital Sciences. They declare they want to be the world's foremost space company. They're trying to be a pure play. Now they've got NASA contracts and defense contracts, but that's because that's right now where the money is. They want to be as purely commercial as they can be. And there is, well, we all know about the aerospace and defense downsizing that's been going on for the past few years here. As the defense downsizing has been kicking in, either, well, consolidations have been taking place. Lockheed Martin, L'Oreal's picking up everything. Martin Marietta just picking up everything before that. Alliant Tech Systems just picked up Hercules, all those types of things. So there's consolidation going on and concentration on core businesses. So you see some players drifting specifically towards, say, defense. L'Oreal has really focused on becoming a defense player. General Dynamics is out of space altogether. They sold the space systems to Martin Marietta, which is now Lockheed Martin. So you're seeing a clarification, if you will, a crystallization of the industries, so you can more and more invest purely in space businesses now. A lot of these companies then that see the decline in defense are putting a lot of emphasis and a lot of money in getting into commercial markets. Martin Marietta and Lockheed Martin now is solidly back into commercial launches with Proton, you know, the LKEI Proton thing. Lockheed Punachov Energia. Lockheed's got the Lockheed Light launch vehicle. Martin Marietta's now got Atlas going in there. So they're really diving right back into the commercial market there. Boeing is pushing heavily into the sea launch concept. There's a lot going on out there. Hughes, C. Michael Armstrong, 1992 became CEO of that. He came over from IBM, IBM's international business unit. And he said, you know, let's get out of defense. Let's get into commercial markets. And now, 3 years later, DirecTV is up and running. They just have a huge backlog that is hugely successful. Hughes stock has been, you know, doing pretty good lately. So there are some pure space plays out there. Well, space as an industry is poised for some tremendous growth. There is DirecTV coming online, and the global mobile systems are coming out, GPS, remote sensing is picking up. That's a real slugfest, that industry. You following that at all? They're duking it out in that industry. So there are more and more opportunities. The neat thing, this just occurred to me about a month ago, the reason that these pure commercial plays are starting to become more viable and starting to make money is because for the first time, the benefits of space and the benefits of space business are becoming more personal, more accessible to the individual. DirecTV, you got a little dish right there. It's tapping right off of that satellite up there. Global mobile, you can pick up your phone anywhere and talk to anybody anywhere. It's no longer the grand national endeavor, or, well, there is that going on, but we're arguing about whether that can actually be sustained or not. But as that's kind of eclipsing or fading, the personalized aspect of space is really picking up here. So you as individuals are starting to see space affect your lives directly. So, and there's companies you can invest in directly that are doing that. Hughes with DirecTV, Motorola with Iridium, L'Oreal and Qualcomm with Global Star, TRW with Odyssey, although that's kind of a slugfest right now too. It's out there, and you can make the money. Like I said, I've got the 38% over 2 years returning, and it's, you know, still doing good. There's no dips. It's an uptick right now, so it's looking good. Well, now, of course, everyone wants to invest in the hot new stuff. Helium-3 on the moon, X-33 passenger planes, space industrial business parks. Well, those are still way off in the venture capital stage. You're not going to be able to jump right into those, you as an individual, or even you as a collective entity of some kind. You have to start small. You have to start with the common stocks, with things you understand. You have to educate yourself on how it all works. Dream, please. I'm a dreamer. My head's lost in the clouds, but I'm trying to get my feet firmly planted on the ground and know the businesses. You pick the businesses you want to look at based on their space component, but then you analyze those businesses purely from a business standpoint. Get the space out of it at that point and look at the internal rates of return. Look at the debt to equity ratio. Look at the price to equity ratio. Look at the capitalization, net sales, net profits. You know, get value line, dig into it, dig deep into it, and see whether it is a company to invest in or not. I was out in San Diego last November for International Space Enterprises conference out there, and they got some heavy hitters, a guy from Kidder Peabody, a guy named Tom Donlin from Barron's magazine, And he said that the money will flow to the greatest risk-adjusted rate of return, whether that's computer chips or zeolites or low gravity Disneylands on the moon or whatever it is. If you're going to make a business go, it's got to be a better business than some other business. So concentrate on the fundamentals, and let the capital you build from that finance your dreams. That's the way you got to go through it. So it's a long, slow building process. It's not going to happen overnight. If you want it to happen overnight, you're kidding yourself, and you're gonna get whipsawed. If you're looking at the technical analysis, if you're trying to play the market, jump in and jump out, you're gonna rack up all kinds of broker's fees and stuff, and you're gonna have to spend all your time doing that technical analysis, beta curves and moving averages and all that stuff. It's a full-time job. I mean, even the full-time job people can't. Their record isn't that great, so you as a part-timer aren't gonna do much better than that. So buy and hold. Find the good fundamental companies, buy them and stick with them. That's what's working for me. These companies have to be, these companies that want to develop commercial space entities and businesses have to be founded in grounded in business fundamentals. KPMG, Pete Marwick in Space News did a study back in 1982, and they updated it in 1983. I have some quotes here from that. They interviewed the space entrepreneurs, and they interviewed the investment crowd, the business people, the guys who want to put out their money and get a standard rate of return or whatever. And they found that results from the survey indicate that the aerospace respondents significantly overestimate the financial community's risk tolerance. Financial community respondents tend to shy away from products and services that target significantly higher returns and longer payback periods. But it went on to say that space visionaries can improve their chances if they concentrate on solid business principles. A venture seeking financing needs a balanced management team and should look to hire a solid business manager, someone who can develop business strategy, talk to investors in their language, and bridge the gap between the technology and the business aspects of the high-tech investment. So the business is there, but it's a business, whether it's space or real estate investment or whatever else you're in. It's got to be a business first and foremost, and if it isn't, then it's going to go bust, pure and simple. Gerard K. O'Neill, bless his soul, GeoStar went belly up because he didn't look at the business basis of it all. He got bought out by someone who did know the business basis of it all. So, caveat emptor, buyer beware, the investor beware, watch out there. The wolves are circling. You got to protect yourself. You got to know the lay of the land, as it were. Well, there's hope in that report. Once the markets actually mature, and as market investment in such projects, and as market capture strategies are developed and products and services progress out of the R&D stage, investments will begin to rise. In other words, once you prove your product, people are going to come want to invest in it. But you got to prove it first. There's a little bit of a leap of faith there that you got to take. Well, so what does this all mean? What does this mean when you go to Charles Schwab on Monday and want to sink some money into some space companies? Well, like I said before, I'm not recommending companies. I can't do that. I can just tell you what I've looked into. I'm not SEC qualified or any of that, so this is not a recommendation. This is just my observations. The 5 companies I'm tracking right now in my stock picks in my newsletter are Lockheed Martin, old habits die hard, for their commercial launch, primarily on the strength of their commercial launch capabilities. Motorola, who is the prime investor in Iridium, which is moving along nicely. They're fully financed, both equity and debt, or getting there soon, and will be, I don't think they're going to have a problem in doing what they plan to do. Qualcomm, who is a 49% owner of the Global Star system, which L'Oreal is also involved in. L'Oreal, I like L'Oreal a lot, but they are a pure defense play. They're leaning more towards defense, and I'm leaning more towards pure space plays. So I don't. L'Oreal would be good, but I'm not. It's not in my portfolio. Who else is there? Orbital Sciences. I just keep plugging along. They're having trouble with Orbcomm and all, but they're they got a lot of things going. I really do think, this is my leap of faith, I think they're going to knock one out of the ballpark here eventually, because they're slugging away and they're not going to give up. Dave Thompson's a self-avowed space nut. And the stock's not taking off, but it's not dying either. There hasn't been a vote of no confidence yet. The problem with orbital sciences is the problem with all of these space ventures we've seen up to now. They're pushing what they have, and they're overselling it. And they've got to get the glamour, get the money, attract the attention. Well, if you push something like Orbcomm as an operational system when it's still very much experimental, then you have your glitches. Well, it's going to cause blips, it's going to cause problems, it's going to cause dips in the stock. So they're feeling their way, but they'll get there. I really do think they will. And what's my other one? Hughes. Oh, Hughes. I love Hughes. They, let's see, got some numbers back here. They have declared that they will have over 50% or more of their business coming from non-defense into commercial space ventures, pretty much. They started at 31% back in '92 when Armstrong took over. So they're really pushing into the commercial markets. And they've got this new idea, Space Waves, which is kind of a competitor to the Teledesic concept, direct digital and video transmission via a satellite system. They're only talking 24 satellites or even LEO, GEO transmission or something like that. I have my doubts about Teledesic, but you can't invest in them publicly anyway. You got to get into the venture realm. You got to be able to play with Bill Gates and Craig McCaw and those guys before you can jump into that boat.
You want to take a question? You want to take a question?
Well, let me wrap this up here. If you expect overnight success in investing, you're not going to see it. You're going to get whipsawed. You got to look for a long, slow process. John Costin and his Powers of 10 here have a whole program of interlinked investment clubs. That's a good way to go. You might want to try diving into your own investment club, but do your own research to a greater or lesser degree. Find a few people in your locality, get together with them, bat it around, and then come up with an investment plan, stick with it, and go for it. Well, for example, I don't look at the Wall Street, the stock report any less than on a quarterly basis. You don't really need to, because you're investing for the long term. We're talking 20, 30. Chuck was saying that it's 10 years before you can even consider actually doing anything with a space station, if not 20 or so. So we're talking about a long-term horizon here, and that's the way you got to think. So don't jump around with short-term investments when you're looking at the long-term horizon. So, as the old saying goes, nothing succeeds like success. We've got the direct TV happening, the global mobile starting to happen. All that, as those make space investing more feasible, more profitable, more acceptable, if you will, then more and more capital is going to be attracted to these markets, and it's going to become a more and more profitable venture. So that's what I have to say. Questions? Chuck.
With OSC being the first of the space startups that actually went through an IPO and are publicly traded now, what has their price-to-earnings ratio been trading at over the last few years?
Wall Street Journal won't print it. They put a ... in there, which surprises me because they've been around for a while. They should have a PE, but I haven't been able to determine it.
You can't compute it from the annual report?
I haven't bothered to yet. I suppose I should, but I haven't gotten around to it yet. Yes, sir.
For those of us who have not really gotten our feet very wet in investments, do you have any particular books other than your own
Yes,
that you recommend?
one of the best books I've ever read. It's kind of dated now, but the generic advice in there is still sound. It's called "Still the Only Investment Book You'll Ever Need." Investment Guide You'll Ever Need by Andrew Tobias, if you've heard of him. It's just fantastic. He's like, your Dutch uncle who just grabs you by the collar and goes, "Look, kid, don't be stupid about this. Look at the fundamentals here." And a lot of what I'm saying is coming right out of his book. So that's a really good one. And it was updated in '86. I don't know if he's done a new update, so some of the specific information is dated, but the generic, buy low, sell high, hold it for a long time, look at the fundamentals, that's all good.
Any others that you really like?
I can't think of any off the top of my head right now. Yes.
Alex, you were just, trying to separate yourself somewhat from Chuck, but I still see the bias you follow the heavyweights in, the industry. I was wondering, do you track anything, on the entrepreneurial side? Do you see, other people like the late Gerard O'Neill?
Oh, I follow it. I'm not separating myself from Chuck.
All right.
I'm just saying I can't play in that league right now. That's the thing. Yeah, I'm following Chuck now. And, I'm looking at Kistler Aerospace and International Space Enterprises and those kind of people. But you can't get into it at this level. We're talking millions to even ante up to the table.
Right.
So I watch it, and maybe they'll go public eventually, but, it's just a hobby right now.
To invest in companies like that, it's such a burden to go through the registration process to take small investors that most people just don't do it. Bruce McKenzie's got some papers on Reg D offerings and things like that, but pretty much you have to be millionaire, multimillionaire, $200,000-300,000 a year of annual income before you can even take. Somebody like me couldn't even take your money unless you met all these investment tests. Grab Bruce and get a copy of his paper. He writes a lot on it.
There's something like you have to have at least $200,000 in identifiable personal income a year before you can even, look at the papers that you have to sign or something like that. Bruce was showing me just yesterday. Bruce McKenzie, he's going to be presenting a talk on his idea of a mutual fund tomorrow at 11. Great idea. I don't know if it's a thing to jump into right away, because as soon as you talk mutual fund, you're talking SEC regulations and papers and accountants and attorneys and all that stuff. You can develop investment clubs formed as partnerships. The National Association of Investment Clubs out of Detroit have been doing it since 47 or something like that, and they've worked out the bugs, and they're willing to help anybody, and I can get you that address if you want. And then John Costin and his associates back here put that together into a networked scheme to develop the money to eventually finance off-world development. But that's, again, talking about a 20, 30, 40-year timeline horizon. What can you do now to get into this? Well, you can pick up the Wall Street Journal and start looking at the stock tables. Any other questions? Well, thank you. Hope it's useful. And